I was talking to a nurse the other day. Been working at the same hospital for 12 years. Smart woman, real smart. And she told me something that just about broke my heart. She said, "Warren, I put $10,000 into some tech stock my brother in law recommended. Lost half of it in 6 months. But you know what's funny? Last year, I noticed our hospital switched to these new surgical robots. 6 months later, that company's stock tripled. I watched it happen right in front of me, and I didn't buy a single share." Now, here's what most people don't realize. She had information that Wall Street analysts would have paid good money for. She saw it with her own eyes, every single day, and she ignored it. If that sounds familiar, well, you're not alone. See, we've been taught this idea, and it's dead wrong, that successful investing requires some kind of special knowledge, that you need to read the Wall Street Journal every morning, understand complex financial models, or have an MBA from Harvard. Hogwash. The truth? The best investment opportunities you'll ever find are probably sitting right under your nose, at your job, in your industry, in the patterns you see every single day that you've trained yourself to ignore. Here's a statistic that'll surprise you. According to a Fidelity study from 20 retail investors who worked in the same sector as their investments outperformed professional fund managers by an average of 2.7% annually over a 10-year period. 2.7% might not sound like much, but on $100,000, that's an extra $30,000 over a decade, just from paying attention to what you already know. This is where it gets really interesting. Let me tell you about a fellow named Peter Lynch. Ran the Magellan Fund at Fidelity. Turned it into the best performing mutual fund in the world. And you know what his secret was? He invested in what he called the cocktail party portfolio. He'd go to parties, talk to people about their jobs, and when somebody got excited about something happening in their industry, really excited, eyes lighting up, hands waving, that's when his ears would perk up. He bought Dunkin' Donuts because his kids couldn't stop talking about it. Made millions. Now here's the psychological shift most people miss. We think our day job knowledge is ordinary, common, worthless for investing. After all, if we know it, everybody must know it, right? Wrong. What seems obvious to you is invisible to 99% of investors out there. That nurse I mentioned? She understood healthcare workflows better than any analyst on Wall Street, but she'd been conditioned to think her knowledge didn't count. It's like, imagine you're a plumber, and you notice every house built in the last 2 years is using this one particular brand of pipe. Not because anyone's advertising it, but because it's genuinely better, easier to install, lasts longer, costs less. You see, contractors switching to it everywhere. That's information, real information, the kind that matters. Let me walk you through how this actually works with real numbers. Say you're a teacher, been teaching for 8 years, and you start noticing something. Every single school in your district is adopting this one educational software platform. Teachers love it. Kids are actually engaged. Test scores are improving. The company running it is publicly traded. You do a little homework. Nothing fancy, just checking if the company's making money and not drowning in debt. Looks solid, so you invest $5,000. Now, you're not day trading. You're not checking the stock price every hour. You're just watching. Because here's your edge. You'll know before Wall Street analysts if this thing is working or failing. You'll hear it in the teacher's lounge. You'll see it in your classroom. 3 years later, that software is in 40% more schools nationwide. Your $5,000 is now worth $12,000. That's a 140% return. And you didn't need a finance degree, you just needed to pay attention to what you already knew. Compare that to the average investor who put money into whatever stock their cousin mentioned at Thanksgiving. They're checking Reddit forums, watching CNBC, getting whipsawed by every piece of news. They have no edge, no real knowledge. They're just guessing. Now, you might be thinking, Warren, I can't invest in individual stocks. That's too risky. What if I pick the wrong company? Fair question. And you're right to be cautious. Here's what I tell people. Start small. Take maybe 5 of what you'd normally put in an index fund and put it toward a company you genuinely understand from your work. Just one. Watch it. Learn from it. Or you might be thinking, but doesn't everyone in my industry know this stuff? Where's my advantage? Here's the thing. They could know it, but they don't act on it. There's a massive difference between knowing something and doing something with that knowledge. I can't tell you how many restaurant managers I've met who watched a fast casual chain absolutely explode in popularity, lines out the door every single day, and never bought the stock. They knew. They just didn't act. And then there's this. What about insider trading? Isn't that illegal? Let me be crystal clear. If you have material, non-public information, like you know about an unannounced merger or financial results before they're released, then yes, trading on that is illegal, and you shouldn't do it, period. But noticing trends in your industry, observing customer behavior, seeing which products work and which ones don't, that's not insider information, that's just paying attention. Here's what most people don't realize. The best investors in the world, and I mean the absolute best, aren't necessarily smarter than you. They just have a system for paying attention. I read annual reports. Charlie Munger reads everything he can get his hands on. But we're looking for the same thing you can see at your job. Patterns, change, trends that other people are missing. You know what's funny? Some of the worst investment decisions I ever made were in industries I didn't understand. I didn't know the business. I didn't know the products. I was just following the crowd. And some of my best decisions, those came from understanding something simple, something I could explain to my granddaughter. There's an old saying in investing, never invest in something you can't draw with a crayon. Might sound silly, but it's true. If you can't explain how a company makes money in simple terms, you probably shouldn't own it. But if you work at that company, if you see how it operates every single day, well, you've got yourself a crayon drawing that's clearer than just about anyone else's. So here's what I want you to do. Not someday, this week. First, make a list of 3 companies you interact with through your job. Companies that make products you use, services you rely on, or businesses you watch succeed or struggle. Second, pick one, just one. And ask yourself 3 questions. Do I understand how this company makes money? Is it getting better at what it does, or worse? Would I be comfortable owning a piece of this business for 10 years? If you can answer yes to all 3, do some basic homework. Check if they're profitable. Look at their debt. Nothing complicated, just making sure the foundation is solid. Third, start small, real small. Maybe it's $500, maybe it's $1,000. An amount that won't keep you up at night if things go south. And then, watch, learn. See if your knowledge holds up. See if you really do spot trends before the market does. This isn't about getting rich quick. It never has been. It's about using the knowledge you've spent years accumulating and finally, putting it to work for you. That nurse I mentioned at the beginning? She called me 6 months ago. Said she'd been watching a medical device company, saw their equipment in her hospital, talked to doctors who loved it, noticed other hospitals starting to adopt it. She bought shares. Small position, nothing crazy. Last month, she told me it was up 40%. And you know what she said? Warren, for the first time in my career, I feel like my experience actually counts for something financially. Not just my paycheck, but my knowledge, my observations. That's what I want for you. You got more investment insight than you think. You just need to start trusting it. Pay attention, stay curious. And remember, the best opportunities are usually hiding in plain sight. Thanks for watching.